Welcome everyone. I'd like to thank you all for joining us today for today's webinar on Single Audit Uniform Guidance Update presented by Mays & Associates. This presentation will be available on YouTube for later viewing. There will also be instructions at the end of the webinar on how to obtain the CPE certificates for the live attendance. This webinar will be moderated by Mark Wong and I. Mark Wong is an audit partner of the firm with 19 years municipal experience. He will be fielding your questions today. My name is Nikki Apora. I am a supervisor with the firm with 7 years experience. I will be presenting today's session. So we have quite a few things to cover today. What we'll go over is the implementation on the uniform administration requirements, cost principles, and audit requirement for federal awards. Components of this will be the current sources of requirements and guidance, and key changes to the cost principles. I'd also like to go over some of the changes to the 2015 Office of Management and Budget, or what we call OMB, Compliance Supplement. The Compliance Supplement is used for us auditors as a guide and reference when auditing our client's single audit. This is a public document. The AICPA has also suggested that non-federal entities, such as yourselves, can also use this as a guide to ensure compliance. Please keep in mind that we are not reviewing all of the updates. We have just selected what we have deemed significant for the purpose of this session. You should also discuss the update with your internal accounting staff and, of course, your external auditors, as not all scenarios are applicable in all situations. Let's go to slide 6. So before we discuss the single audit update in detail, I just want to quickly go over the changes to the single audit threshold and the effective dates. The threshold for a compliance audit has increased from the current $500,000 federal expenditure threshold to $750,000 starting fiscal year 2016, or some of you out there, it may be calendar year end December 2015. So raising the threshold to $750,000 would maintain a single audit oversight over 99.7% of dollars and 87.1% of the entities that are currently subject to the single audit requirement. Those organizations that expend less than $750,000 in federal funding will no longer need a federal compliance federal compliance audit, but they will be required to make their records available for review or audit if requested by the appropriate officials of the federal agency, pass-through entities, or the U.S. Government Accountability Office. Okay. So as many of you know, the single audit compliance was a driving force of 8 circulars. Here on slide 7, you'll see the on the screen you'll see the different circulars, A133, which most of us are familiar with, A21, A50, so on and so forth. The new update of the uniform guidance for federal awards are now taking what was once the 8 circulars and actually streamlining them into one non-duplicative and non-conflicting guidance. This is now called the Title II of the Code of Federal Regulations, or CFR, Chapter 2, Part 200. I've provided a link in which you can get the document. This will help the auditors and non-federal entities in researching federal compliance and regulation by using one single circular, hence the uniform guidance. So what are the effective dates? We should actually all become familiar with this. By December 26, 2014, the federal agencies such as Department of Transportation, HUD, Department of Housing and Urban Development, federal agencies must implement policies and procedures by placing them into effect the new Uniform Guidance Regulations. But what about non-federal entities? Well, on or after December 26, 2014, you will need to implement the new administrative requirements and cost principles for all of the new federal awards and to additional funding to existing awards. That additional funding is also known as funding increments. So let's go over an example. Just put into practical uses. If the city of Disneyland gets additional grant money after December 26, 2014 from a grant that was awarded prior to that date, and we're talking about just grant monies, these new monies are subject to the new uniform guidance requirement. But of course, please check your grant agreement addendum for the dates to determine if these grant monies fall under the new uniform guidance. So what about subrecipients and subawards? Let's go through what that means. For pass-through entities or PTE and subawards, the effective date is the same date of the federal award in which the subaward was made. So here's an example. Let's use, again, the Department of Housing and Urban Development CDBG program as for an instant. HUD granted City of Disneyland $1 million of CDBG federal monies on November 1st, 2014. City of Disneyland then passed through $500,000 of that $1 million to the City of Universal Studios on January 1st, 2015. Is the $500,000 subject to the uniform guidance? Well, since the new uniform guidance effective date is on December 26, 2014, any new grants or additional funding, and it's applicable for new grants and additional funding, the $500,000 is actually subject to the old rules. Remember, going back to the example, the original federal award was granted November 1st, 2014. So on slide 10, here are the summary of key changes. We're going to go over the changes in administrative requirements. There was a focus on internal controls. This isn't new, just an emphasis and more awareness of the importance of internal controls. Subrecipient monitoring and management. This topic right here we'll go over in great detail. Out of all the changes that were made to the uniform guidance, this was very much harped upon and was actually a separate class that AICPA provided. And we'll also go over the procurement standards. We'll also go into some details in the changes in cost principles, such as compensation and indirect cost requirement. Under the indirect cost requirements, there is a one-time extension up to 4 years, and this is for those who already have negotiated indirect cost rates. And for those who haven't, there is something now called the de minimis rate of 10% of modified total direct costs. Again, we'll go over this in future slides. Okay, so the first thing that we're going to go over is the focus on controls or the internal control clarification. Internal controls, as we all know, are always an important component in accounting and auditing. It was very much emphasized in the Uniform Guidance Update. So non-federal entities must establish and maintain effective internal control over the federal award that provides reasonable assurance that the non-federal entity is managing the federal award in compliance with the federal statutes, regulations, and the terms and conditions of the federal award. So the uniform guidance refers to the standards of internal control in the federal government when discussing internal controls, but essentially we all know internal controls are controls are in place that ensures that expenditures are allowable. Have reimbursements requests been reviewed and approved prior to filing with the federal agencies? These are just some of the things that we would have to consider and make sure that are in place. So in addition to the clarification, non-federal entities must take prompt action when instances of non-compliance are identified, including audit findings. So what does that first bullet point mean? Well, when cities are performing reviews and have identified a non-compliance, the city should actually rectify the non-compliance immediately. It should take reasonable measures to safeguard protective, personally identifiable information and other information the federal awarding agency or pass-through entity designates as sensitive, or the non-federal entity considers sensitive, consistent with applicable federal, state, and local laws regarding privacy and obligations of confidentiality. I think that's pretty much a given. Anything sensitive, social security numbers, especially when we're testing payroll or payroll is being tested, that should be kept locked up. The uniform guidance wants to make sure that there are safeguards in place. So far, are there any questions?
Okay, this is Mark Wong, and I have a few questions here. First question, and the question is, have also heard the term super circular been used. Is this also referring to uniform guidance? The answer is yes. So the term has been, the term super circular or the term uniform guidance and also the term CFR 200 are all referring to the same document. So basically, these are all the rules and regulations that are effective for federal grants of existing funding increment after December 26, 2014. Okay, question 2. The second question is, where can I find the new uniform guidance? The answer is, if you on slide number 7, if you go back to slide number 7, we've provided you a web address on where you can find the uniform guidance, or you can just simply Google CFR 200, and it's all there, and all the links are provided. Okay, third question here, for the de minimis indirect cost of 10% of modified total direct cost, will you be providing an example on how to calculate that? Answer is yes. We will be providing an example calculation later on in this session, and that's on slide 37, but Nikki will provide that calculation in about a few minutes. Okay, last question here. If I still have an old federal award that was awarded in February 2014, but I had expenditures in fiscal year 2015. It says, which rules do I follow? The answer is, since this federal award was awarded prior to December 26, 2014, you will follow the so-called old rules. So that is the old circulars. It can be A87, A110, basically the 8 circulars that are provided on slide 7 on those are the old circulars. So those are the questions, all the questions I have right now. So if you have any questions, you can just type it on the conversation tab, and I will answer them when the next questions and answer session comes up. All right, back to Nikki.
Thank you, Mark. Just a reminder for those joining us via phone, and if they're not able to actually be in the text conversation, you can also speak your questions through the phone. So just give us a heads up if you do have any questions. Okay, if that's it, let's move forward. What are the big changes? Well, here we are. It's the subrecipient monitoring and management. I must say this appears to be the most biggest change in this update. So let's start the topic and we'll go over it in great detail. So for the subrecipient monitoring and management, new requirements for the pass-through entities with regard to monitoring activities. This includes a required risk assessment of subrecipients. Some of us are familiar with assessing risk or internal controls with our clients, but for those who are not, we'll go over this. There's also a clarification of the definition of subrecipient versus contractor, and also there are new subaward requirements. Let's see. Let's move on to slide 15. So the new uniform guidance pushes a lot of requirements on down to the pass-through entities. The first one, let's go over. It's the non-federal entity is responsible for monitoring programs for compliance and performance expectations. Also, they must evaluate each subrecipient's risk of noncompliance with federal statutes, regulations, and the terms and conditions of the subaward for purposes of determining the appropriate subrecipient monitoring based on the provided criteria, which we'll go over. This risk assessment should be documented and may be inserted in the subrecipient's file. So what does this second bullet point mean? What it essentially means is that the PTE, or pass-through entity, has to determine the risk assessment of each subrecipient and document its evaluation. So what's a risk assessment? It's a way that we can measure the degree the potential of the noncompliance and the likelihood that the noncompliance will occur. We will discuss ways and how to evaluate the risk of noncompliance shortly. But basically what you're aiming for as a non-federal entity is for a lower risk of noncompliance. But that does not mean that if you assess a subrecipient with a higher risk of noncompliance, you shouldn't award them any federal funds. If anything, it may just mean that you want to impose more restrictive compliance components in the subaward, but we'll go over that as well. Okay, so in this slide, we will go over how to evaluate risk. Basically, you as the PTE are evaluating the subrecipient's internal control, which I have mentioned earlier is a major change in the emphasis under the uniform guidance. So let's go over some of the criteria, which are suggestions from the uniform guidance. I've included them here, but they're not limited to just these items. Subrecipients experience with the same or similar subawards. What are the results of previous audits, including whether the subrecipient receives a single audit and the extent to which the subaward has been audited as major. Whether this subrecipient has new personnel or substantially changed systems, and the extent and results of the federal awarding agency monitoring. So let's use this in a practical scenario. City of Disneyland, they awarded CDBG money to the housing nonprofit. Well, this housing nonprofit operates with only federal funds, only. So inherently, they are well experienced with the use in managing federal funds. Let's just say they're also a large entity and are subject to single audits annually, and their single audit report they haven't received any findings. Let's just also say that the subrecipient monitoring reports that they provide to the City of Disneyland has determined to be in compliance with the program. Well, based on what we've noted here, I would determine that the risk of noncompliance of this subrecipient to be low. So practices and evaluations like this is just part of how you can evaluate your subrecipient's internal control risk or risk risk assessment. You can document this again and keep this with your subrecipient's file. But what if you've determined that the subrecipient's risk of noncompliance is high? Let's just say the housing nonprofit is in its first year of existence, and the staff is inexperienced. Inherently, the risk of noncompliance is high. So as the city, you can include more requirements in your subawards, such as submission of quarterly reports versus semi-annually or annually, or an increased monitoring visitation. Again, this should all be documented and included in the subrecipient's file, and also the discussion of additional restrictive monitoring tools should be evaluated such that it's best for the city and the subrecipient. And this is what the 2 bullet points here discusses. Considering imposing specific subaward conditions, or monitor activities of the subrecipient and utilize other monitoring tools, just to ensure that their compliance is met. Here are a few more suggestions on slide 18 when facing a high risk of noncompliance with your subrecipients. The first bullet point: do they have any findings when you verified that the subrecipient has been audited? Do you need to consider whether the results of these audits necessitate adjustments to your own records? And consider taking enforcement action against non-compliant subrecipients. So for this third bullet point, you may want to ask yourself, should you withhold reimbursements until non-compliance is resolved? Okay. So I just put up a few definitions on slide 19 and 20. There is a clarification on what a subrecipient versus a contractor is. So I think the best way is to, of course, put definitions on, but maybe go through some examples. So a pass-through entity and a subrecipient partnership, they create a federal assistance relationship. It also so this is also determined by who is eligible to receive the federal assistance. There's also performance measures in relation to whether the objectives of a federal program are being met, and the discussions on who has the responsibility for programmatic decisions. An example I like to put out there is, and we're going to go back to the CDBG award. Let's just say CDBG awarded City of Disneyland $500,000 for housing assistance. This city then grants or subawards it to the housing nonprofit to carry out the program. So in this case, the City of Disneyland is the pass-through entity and the housing nonprofit is the subrecipient. The agreement between the city and the housing nonprofit is the actual subaward, and so the housing nonprofit would then be required to carry out the grant program and its requirements and ensure compliance, such as monitoring that the tenants that are benefiting from the housing assistance meet the income requirement. Some of you may be familiar with this type of program. The next slide goes over the definitions of contract and contractor. Just keep in mind that there's a little asterisk here under the definition of contractor. In the new uniform guidance, it replaces what was once the term vendor as now contractor. Just a little side note. So let's flip it. and say that the city of Disneyland took $500,000 and entered into agreement with the construction company ABC to rehabilitate housing. In this case, the city is not a pass-through entity, as they're just seeking services from the construction company. The construction company is not going to monitor if the tenants that are living in this housing complex is if their income falls under the required components of the program. They're just rehabilitating the housing. So, but the city is still responsible to ensure that these grant monies are used in accordance to the grant agreement. And therefore, in this scenario, in this case, the city is the recipient and there are no subrecipients. Another requirement for the pass-through entity is to ensure that every subaward is clearly identified to the subrecipient as a subaward and includes the following information. Let's go into slide 22. I'm not going to read all of the components listed here. You may all be familiar with what you provide or dictate in the subawards that you grant to the subrecipients. I'm just going to read a few of them. Subrecipient name and DUNS number, the subaward period of performance, start and end date, that's quite important. The total amount of the federal award. Let's go over to the next slide to see some more. The federal award project description, the name of the federal awarding agency. But what I'd like to point out is the last bullet point here on slide 23. If you, as the pass-through entity, if you have not already provided an indirect cost, an indirect cost rate to your subrecipients, this is a requirement in this update. We'll go over the general topic of indirect costs in a few more slides, but I just wanted to keep this in mind. So again, this is a new component to what should be included in the subaward. Oh, let me go back. So let's just say you've issued your subaward to your subrecipients, but as of right now, you don't have or have not included these components. Well, what can you do? You can go back and create a subaward addendum to include what the uniform guidance is requiring. There's no harm in going back and sending that off to at least ensure that there is documentation and of the communication of the purpose of the grant, the necessary information. So with all of these updates, the only aesthetic change to your single audit report is just one column on the CFA, the schedule of expenditures of federal awards. Some of you may currently have a footnote disclosure in the body of your report that reports all the expenditures to subrecipients. Starting fiscal year 16, or for those of you who have calendar year end audits, December 31st, 2015, the uniform guidance is now asking that you include your expenditures to the subrecipients on your CFA. Any questions?
Okay. Okay. I have a question here. And the question says, the new single audit uniform guidance has huge amount of changes, and what are the areas of emphasis I need to know for fiscal year 2015 ending June 30, 2015? So, and the answer is you are correct. The CFR 200 document is huge, and so from our perspective, from the training that we have heard, and from the sessions that we have attended with AICPA, the AICPA Government Audit Quality Center, which is the GAQC, the emphasis has a lot, for at least for 2015, has been on subrecipient monitoring activities. So those include subrecipient risk assessment documentation, subrecipient monitoring activities, and sub-award requirements. So information that you're required to communicate to your subrecipient. So so you want to pay attention to your currently what subrecipient activities and documentation do you have. Okay, next question here. And the question is, when does subrecipient risk assessment and monitoring requirements become effective? Okay, so the answer is basically, again, the key date is December 26, 2014. So if the federal award is after 12/26/2014, or it is your old, you have an old federal grants that is from prior to December 26, 2014, but you have now received either grant increased funding with a grant addendum, you would want to read that. So you want to read that to make sure that see what are the requirements in there. Okay, last question here right now. It says, I have a non-profit subrecipient that falls under this new uniform guidance, but the sub-award agreement with the non-profit subrecipient has already been signed, but the agreement did not contain all the information that that we just discussed earlier. What can I do? And I think Nikki had touched on it, has talked about it earlier. So basically, what we would strongly suggest is that I would contact the non-profit subrecipient and communicate with them all the information that is specified in CFR 200.331. For example, that communication, you can do it either through your contract addendum with your subrecipient, or you can do it through a letter or email. So whichever that works best for you and your subrecipient. But the key is that you really want to make sure that you comply with the new uniform guidance and do that, complies with that communication. Okay, so last question I have here, it says that if my county is a June 30 fiscal year end, when do I need to update the CFR to include expenditures to subrecipients? So you would need to do that for your fiscal year 2016. So currently under the old rules, you either disclose your expenditures to subrecipient either on your CFR, which is that CFR, or the footnotes. So coming to 2016 next year, that there's no more option. So everyone has to, all the CFR has to include the expenditures to the subrecipients. So I hope that answers your questions, Mark. So if not, please let us know. You can either email us or type in your question, any follow-up questions, any clarification on the in the conversation tab. So back to Nikki.
Okay, thanks, Mark. So that is the subrecipient monitoring requirement. Let's move on to the procurement standards, and that's on slide 26. Let's go over this briefly. So non-federal entities will follow the 5 procurement methods outlined in the uniform guidance. We'll go over these 5 methods in the following slides. So all of the non-federal entities should review these changes carefully to determine determine the impact on their procurement procedures. The federal government is allowing a 1 full fiscal year grace period for compliance with the procurement requirements, which means you have up until December 26, 2015 to forego following the procurement method here as outlined. So what are the methods? I'll go over the 5 here. The first one being micro purchases. It's $3,000 in aggregate, or if you have a construction project and that's subject to the Davis-Bacon Act, it's $2,000. There doesn't need to be any quotations, and it should be equitable distribution among qualified vendors. The second method is the small purchases. Excuse me. It should be simple and an informal procurement method, not more than the simplified acquisition threshold, which I believe right now is currently $150,000. You can actually get the threshold information off of the federal website acquisitions.com. That website will be able to keep you updated if there's any changes in the simplified acquisition threshold. Continuing with small purchases, price and rate quotations must be obtained from adequate number of qualified sources. So you may be wondering, well, what is considered an adequate number of qualified sources? COFAR, another acronym, it's the Council on Federal Assistance Reform. COFAR actually spearheaded the changes to the single audit requirements. They suggested 3. The third method is the sealed bids. It's anything above the simplified threshold of $150,000. They're preferred for construction projects, and these must be publicly advertised. The fourth is the competitive proposals. That is also above the threshold of $150,000. More than one source of proposals. It's usually used for fixed fees or cost reimbursements, and a written method of evaluation and selection should be included. And the award must go to the most advantageous proposal. And the fifth and final method is the sole source. It must meet at least one of the criteria. It doesn't have to meet all of them, but it's the single source availability. Is it a public emergency? Has there been a written request that has also been approved by the federal agency or the pass-through entity? And has competition been determined to be inadequate? So you're probably wondering, and there are probably questions out there about implementing these policies as your own procurement policy and procedure. Bear in mind that these are just for federal awards. If your policy is more restrictive than what's outlined here, then using that policy in terms of and related to the federal awards, that might be in your best interest. Again, adopting these procurement methods as policy is optional, but can also be deferred up to 1 year, which is December 26th, 2015. Okay. Any questions regarding procurement or anything that we've covered so far?
Okay, I have a question here. The question is, it's a clarification questions, and it says on the CFR 200, the effective date on CFR 200 for procurement standard is December 26, 2014, but now in this webinar, you say that the effective date is now changed to December 26, 2015. The answer is basically it's correct. So per CFR 200, the effective date for procurement standards is December 26, 2014. However, the federal government has provided a grace period of 1 year for the procurement standards. So basically, there's an option for you to, basically it's option for you, and I think most cities are, or at least most cities that we've talked to are leaning towards, taking advantage of the grace period. So therefore, yes. So the effective date there's a grace period of 1 year, and if you option for the grace period, the effective date is December 26, 2015. I think that's all of the questions I have right now, and I see that we have a couple of questions on the conversation, and I will pick it up on in the next question and answer session. Back to Nikki.
Okay, sounds good, Mark. Cost principles. Another change here in the uniform guidance. So what are cost principles? Well, basically it establishes rules for determining what's allowable, what the allowable costs incurred by the non-federal entities under the federal awards. This was also a big emphasis and discussion, but mostly related to compensation and indirect costs. So first, let's go over the compensation aspects of cost principles. Time and distribution records must be maintained for all employees whose salary is paid in whole or in part with federal funds, or used to meet a match or cost share requirement. And basically what that means, documentation, maintaining of documentation. This also goes back to internal controls and maintaining proper internal controls. Compensation, next bullet point, compensation is not based or should not be based on budget estimates alone, but initially, if that's what you have now, when you obtain the final numbers, adjustments must be made such that the final amount charged to the federal award is accurate, allowable, and properly allocated. If that means making an adjustment to your reimbursement request at the end of the period of performance or at the end of the quarterly reports, this goes into providing a full disclosure and all the time worked for the organization and what percentage is federal. All of this should be not budgeted and should be actual time worked. Conference unmuted. So there's new standards for documentation. Like I said earlier, charges must be based on records that accurately reflect the work performed, must be supported by a system of internal controls which provides reasonable assurance that the amounts are accurate, allowable, and properly allocated. You want to make sure that your payroll module or your timesheet entry database is fully functioning, and there are reviews and cross-checks to make sure that the correct time is entered into the system, and also that's being provided to the federal agency for your reimbursement requests. You want to make sure that you incorporate all of these aspects into your official records. Make sure that there's a reasonable reflect total activity for which employee is being compensated. Additionally, in slide 33, activities may be expressed as a percentage distribution of total activities, but the total activity should be, like we mentioned before, actual hours worked. Non-exempt employees must also prepare records indicating the total number of hours worked each day. And salary and wages of employees used in meeting cost share or matching requirements on federal awards must be supported in the same manner. So it goes across the board. Okay, so that's just a little brief summary on compensation. Let's go over indirect costs. So indirect costs are basic costs that are incurred for common or joint objectives, and therefore can't be readily and specifically identified with a particular project or activity. If you recall, I mentioned earlier under our subrecipient monitoring and management that the pass-through entities are now required to provide their subrecipients with an indirect cost rate. This is where we'll start the discussion. So federal agencies and pass-through entities will have to accept a non-federal entity's negotiated indirect cost rate, unless there is an exception that is mandated by statute or regulation. So for those who have already negotiated in direct cost rates, you actually have a one-time option to extend that rate up to 4 years instead of an annual negotiation. And for those who have not done this, the uniform guidance has now, provided the option of a de minimis rate of 10% of modified total direct costs, or MTDC. We all love our acronyms. That may be used indefinitely, and we'll go over the calculations for this de minimis rate of 10% of the MTDC in the next couple of slides. Okay, so what is the MTDC? Well, it includes these following items: direct salaries and wages, fringe benefits, materials and supplies, travel. And this fifth one we need to pay a little bit of attention to. It's subawards and subcontracts up to the first $25,000. So that is the ceiling of each subaward or subcontract, regardless of the period of performance of the subaward and subcontracts under the award. Moving on. So that's what it includes. What does it not include? Things like equipment, rental costs, tuition remission, and on the 8th line here, portion of each subaward and subcontract in excess of $25,000. So anything more above the $25,000 is not included in this modified total direct costs. So let's look at an example. Okay, so we kind of provided a calculation here. We, in the first few rows or first half of the Excel file that you see here that's embedded in the slide, we have our direct costs, things like salary and benefits, $95,000. We have supplies, the total subaward of $100,000, and capital equipment. So then we have our total balance of direct costs related to a project. So here in this scenario, if this program has not does not have a negotiated rate, we're going to start calculating the modified total direct cost to get the de minimis rate that we can apply to our reimbursement request. So the total direct cost here is $210,000. Remember, there are certain aspects of the modified total direct cost that we can't, there are certain aspects of direct costs that we cannot include in the calculation. Here it's capital equipment, and then the excess of the over $25,000 related to the subaward. Here in this example, the excess is $75,000. So we want to reduce the total direct cost by those two line items. And then we get the MTDC. Now we want to apply the 10%. And so our total de minimis indirect cost rate in this example here is $12,500. So you can actually take this $12,500 and apply that as part of your reimbursement request under indirect costs, or here it's de minimis indirect costs. Any questions?
Okay, I have a question here from Brad, and Brad's asked the questions on one of the procurement standard, and the question is, what is most advantageous? So, basically, it's that standard is in CFR section 200.320. So basically, what it says is that it says contract must be awarded to the responsible firm whose proposal is the most advantageous to the program, with price and other factors considered. So I think that comes out right out from CFR 200, and so basically you would have to interpret it best to your program knowledge on what is most advantageous. So And in addition, you have to also look into what price and other factors considered. So I would assume that those will be like experience of the contractor that you worked with before. So that will be I think that's how we will look at it. Okay, on to the next question. The next question is when is the new single audit 750,000 threshold effective? So I think this goes back to our earliest discussion. So basically, the answer is this is if the single audit threshold is effective for fiscal years beginning after 12/26/14. So what this means is that for most municipals, this is effective for calendar year ending December 31st, 2015, or for fiscal years ending June 30, 2016. So in short, for any one of you out there that has calendar year ending 2015, it will be effective for you. Or for most cities that we deal with, who has June 30 year end, the single audit threshold is for next fiscal year 2016. Okay. And then I have one more question, and then I'm going to address also some of the questions to see if there are questions coming from the conference call. Okay, so just one question here. It says for internal control, the requirement does not look new, are they? So the answer is correct. So all the internal control requirements that are in the new CFR 200, they are not completely new. So basically what the new uniform guidance provided is the clarifications, and they place a lot of emphasis on internal control, and they basically gathered all the requirements from the old circulars A87, A110, A133, and put everything in one document. And then just again, just a quick emphasis. There's a lot of emphasis on internal control and on subrecipient monitoring. Okay, so I'm going to see if there are any questions for those that has called in on conference call. Hello, are there any questions that you guys have from the conference call? No. Okay. Okay. So I have one last question here that I see. It says regarding charging payroll to federal expenditures, you are saying that budgeted time is not sufficient. The answer is correct. In the CFR 200, the new compliance requirements, budget estimates alone is not sufficient. If the salary is paid or in part with federal funds, or if the salary is used for matching, budget itself is not sufficient. So basically, if you use budget estimates, adjustments must be made such that the final amount charged to the federal funds is accurate and allowable. So I hope that answers the questions. If you have anything else, please carry on. Let us know what your questions are. So back to Nikki.
Okay. Yeah, I know there's a lot of updates here. So if we can't get to your questions in this session, please feel free to email us. We have provided our email address at the beginning of the webinar, and I believe it's on slide 4. So please feel free to shoot us an email, and we will respond as quick as we can. So let's move on to financial system management. I just want to go over this briefly. I know most of us are very familiar with this. It's the system in which, and not a like a system in terms of a database, but it's just a way to maintain your federal awards transactions and activities. The uniform guidance is just reiterating the importance of maintaining accurate, current, and complete information related to your federal awards. So just read a few things of here on the slide, slide 39. The identification in its accounts of all federal awards received and expended and the federal programs under which they are received. The information should include your CFDA number, the Catalog of Federal Domestic Assistance number and title, the federal award identification number and year, the federal awarding agency, and if you're a pass-through entity, of course, your name. And so, the information, is it accurate, current, and complete, is a disclosure of the financial results of each federal award or program. So here are other components that are required when utilizing the financial management system on on slide 40. Again, if you have not included some of these components, just go back and ensure that you do have all of the right and accurate information for your records. Okay. So I've included a little brief conversation regarding the compliance supplement. The OMB has issued the final version, I believe it was just a couple weeks ago, of the June 2015 compliance supplement, and it can be found on the link that I provided here on slide 41. Just make sure you're using the correct year supplement if auditing, or if you're going through another prior year. I just wanted to go over what I thought was significant. We have a second session next week on Wednesday that will go over these changes in detail. Basically, the second section is about the uniform guidance and how you can prepare for the audit. So please join us if you're able to. Again, that's no cost to you. I just listed a few pieces of the compliance supplement that are very helpful. This is something that us auditors use to audit the single audit programs when we come to your city and sit down and ask for all these items. But if you want to get a familiarization of what we're looking at, the compliance supplement is a great resource and tool. We have here in Appendix 5, when you do pull it up, it's the list of changes to the compliance supplement, so you can see the comparison of what has been added or deleted. And then there's also what we call a matrix of compliance supplement, and what this means is it breaks down each program, each CFDA number, and lets you know what items or components are direct to material. You'll notice that starting, I believe, auditing fiscal year 16, Davis-Bacon Act and the Property Acquisition and Relocation Assistance, they're not going to be included. The OMB has determined that these are not directed material. However, if there is a requirement in your grant program from the federal agency, then you must still be in compliance with that. So just keep that in mind, that although that under the OMB it's not directed material because that is for our audit purposes, our audit use, it may be material in terms of your grant program. So use the two as a guide, the compliance supplement and your grant agreement. It's just a tool. And if you're curious about how us auditors are maintaining how we can audit both the old and the new, the compliance supplement is actually has broken out in part 3 of the document the two ways that we can audit, because I know there's going to be some entities that will have grants, 2 grants under the same program that will probably fall under the old rules or old OMBs, and some that will fall under the new. So that this part 3 of the compliance supplement will also be helpful. So just recapping on today's session, we went over the effective dates. Again, I know there's too many dates here and to kind of keep track, but again, if you have any questions and need some clarification, please feel free to contact us. We went over the changes in administrative requirements. We talked about internal controls, and again, Mark said it's not a new thing. It's just more emphasis that the non-federal entities should have proper internal controls. As auditors, when we come to the client, that's the first thing that we take a look at. There was a big push for change under the subrecipients risk assessment and monitoring. If you're still unsure as far as being a pass-through entity, unsure on how to assess your subrecipients risk, again, just reach out to us. We'll be more than happy to help. We also talked about the changes in cost principles related. The big change under that umbrella is compensation and indirect costs, and also the audit thresholds changing from 500,000 to 750,000. I know that's a big deal. Hopefully, for some of you that are kind of teetering in the cusp, that'll be beneficial to you starting fiscal year 2016. And lastly, the compliance supplement. I highly suggest you download the document from the website I have provided, and it's actually pretty great because it breaks out each individual federal agency. So if you only work with Department of Transportation, you can just download Department of Transportation and not worry about HUD or the Department of Agriculture. So it's a great tool. So again, thank you for coming and taking the time out to listen to our webinar. If you'd like to obtain CPE credit for the webinar today, just fill out the survey from the link that we provided here, and I believe we have included that in the chat conversation. Just fill it out and submit it to us, and we'll be more than happy to email you the certificate. We'll probably take a few weeks for us to get your certificate to you, but hopefully sooner than later. So far, are there any questions for anything that we've covered?
Anyone on the conference call hear me? Okay. We had to, I apologize, we had to use an ineffective speakerphone, so they've been having some problems hearing you guys. What I'm going to have Mark Wong do, he was the other speaker. He's actually going to go ahead and call in his phone to this one. If anyone had any questions and they couldn't hear you, could address it, he will be on in maybe 5 minutes or so if you want to hang around and copy that.
I have one question here, and it says, question: where do I find the compliance supplement? So the easiest way to do it is Google Compliance Supplement 2015, and you can see that the document is from the White House OMB. And next question: what is the purpose of compliance supplement? How can I use it to help me? So the answer is basically the compliance supplement is a tool that us, Mace and Associates, being the auditors, we've been sharing it with our clients. So it's a public document from the White House, the OMB, which is the Office of Management and Budget, that is used by auditors for single audit. So as an auditee, you can use it. You can use the compliance supplement to know what are the emphasis and areas that the auditors are looking at. In particular, Part 3 has all the compliance requirements that contains specific compliance requirements that auditors look at or test for internal control and compliance. And in Part 4 of the compliance supplement, if you know what your single audit program CFDA number is, you can use that number and do a search and read the documents to look to see what are the areas of emphasis. Okay, last question. For the financial management system, does it refer to our general ledger system? The answer is it is not referring specifically to your general ledger system. What the financial management system is referring to how you as the auditee, how you manage the financial information reporting for the federal award. It is the combination of what you have on your GL, how your overall system tracks your federal awards, how your federal award is spent, claimed, and accounted for. And basically the auditors and the federal standards wants to know how you are managing your grant reimbursements, your grant requirements, internal control, and how they are accounted for. So I think that are all the questions that I have right now. Except for I think I will stay on for five more minutes for the people on conference call.
Okay, perfect. Thanks, Mark. So I just want to plug a couple more of our webinars out there that we're going to have in the next few weeks, and it looks like a couple months out. I mentioned earlier that we're going to have a kind of part 2 of the single audit update, but the part 2 will be about the preparing for the audit. It's for me as an auditor, I think this will be a great class because we can go over what we look in terms of auditing for the single audit, and then how the city can prepare for that, and any questions or concerns that the city have whenever that the city has in terms of what we look for. So that's going to be next Wednesday, July 29th at 10 a.m. And you can sign up for all these classes on our website, maesassociates.com. Again, it's free and no cost to you. Another class that we're having is why does our audit include an information systems review? I always tell my clients the ISR they use a whole different language. I wish I could speak it, but I don't. So if you're wondering what that is about, that's going to be held Wednesday, August 19th, 2015, also at 10 a.m. And then there's also another class for tips and tricks to avoid financial fraud. I think that might be a very interesting class for everyone to attend, and that's going to be held Wednesday, September 2nd, also at 10 a.m. Again, thank you for participating and coming to our class. I believe Mark will stay on the line for those on the conference call, and if you have any questions, please feel free to email us both, and we'll get to them as quick as we can. Thanks, guys.